Well, good morning, everyone. How is everyone this morning? Hopefully having a wonderful day. Beautiful Tucson weather for those of you not in Tucson. A little chilly here today, but otherwise sun is shining. We're very happy to be here in Tucson. So funny, I'm looking at two computers. Oh, no, now they both say 11:30. One said 11:29 a minute ago. So looks like we're all here. Well, we're not all here. We did have a few more people registering, so I'm not going to hold the rest of you up. Thanking all of the rest of you for being on time for us this morning. Let's go ahead and get started. So this morning, we are here to talk about the fundamentals of business finance, the profit and loss statement. I'm going to get started right away with a PowerPoint presentation. And in there, we're going to talk a little bit about the features of Crowdcast if you're not familiar with that. So you'll be able to see some of the neat things we're going to be sharing with you today, and hopefully some of the benefits of using this program with us today. All right, thanks for bearing with me. So hopefully all of you are looking at a slide right now that says Fundamentals of Business Finance. Again, good morning, everyone. My name is Lori Simmons. I am on the loan team here at Community Investment Corporation. Again, if you're just joining us, this is Fundamentals of Business Finance. We're going to talk about the profit and loss statement today. We are recording this webinar today. We will make it available to you and to others after the fact. So again, welcome. There's a few of us that are going to be speaking with you today. There's my picture, so you can see what I look like. We're also going to be joined by Danny Nee, our Executive Director here at Community Investment Corporation, and Betty Vinal, our CIC Business Manager. Betty's also an independent bookkeeper. I guess I should step back in introducing myself a little bit more. I have, a couple decades of experience as a commercial lender, analyzing business financial statements, but I'm also a small business owner, just like many of you who are joining us here today. So if I haven't been through some of the aches and pains that you have, I probably will be really shortly. So hopefully we're going to be kindred spirits here today, talking about a variety of different things, but really helping each other understand the personal financial statement. So I do see a note here that it says I'm not seeing skipping. Oh, okay, that was Buck. Okay. Buck, maybe what we would ask you to do, I noticed that you were logged in really early, even potentially before me. So Buck, if you don't mind, maybe log out of Crowdcast and then log back in. We're just going to be doing some basic introductions, so you won't miss too much. So why don't you try that, Buck? Once you get back in, let us know if things are a little better for you. For the rest of us, if you don't mind, we're going to keep moving along here. I want to talk to you a little bit about Community Investment Corporation, who we are. So Community Investment Corporation is a financial empowerment nonprofit. We give the members of our community who might be shut out and left behind in our economy access to the knowledge and financing they need to pursue new opportunities. Here at CIC, we unlock the door to prosperity for all members of our community to meaningfully participate in our powerful but imperfect capitalist economic system and reclaim the American dream. At CIC, we know your worth. While the system might not recognize your value, we do. Again, we are a 501c3 nonprofit organization. We've been serving Southern Arizona since 1996. We are dedicated to the economic prosperity of Pima County and the surrounding areas. Our programs are aimed to serve a public purpose, enhance employment opportunities, and help small businesses, nonprofits, and homeowners thrive and succeed. We do manage 3 distinct programs here at CIC. We have the lending program that I work in, where we help small businesses, nonprofits, schools. We have some alternate funding programs like Kiva Tucson and WeFunder. We do also offer a bond compliance program. Typically, that's going to work with our charter schools. And then lastly, we have our home ownership assistance program. I do believe that Patty is joining us here today. Patty is our home ownership assistance manager here at CIC. And then in the background, we also have Caroline, who is our chief operating officer. So our website is listed there at the bottom. We do ask that you visit our website if you haven't already. Some phenomenal programs, excellent resources for you there. So before we get started, I just decided to pull up this little comic here just because that's the way I roll, but income statements and financial statements in general can get a little boring. So let's have a little fun before we start. Do you know what it means, says the accountant, when all of your financial statements are in red ink and the business owner says, it's time to change the printer cartridge? If it was just that easy, folks. So for those of you who don't really get the joke, we joke and say, or we comment, when you're in the red, that means you're not making any money. When you're in the black, you're making money. If we could just change the printer cartridge and have it be that easy, right, folks? So let's start here. We're going to talk a little bit about some of the features in Crowdcast. So down at the bottom of your screen, you're going to see a little comment that says polls. So at first it says ask a question, and then polls. If you would please click on polls and let those of us on the call today know how long you have been in business. So just be honest with us. Let us know if you're just starting out, if you've been in business for a little while, or you've been doing this for over 2 years. So we've got a few votes coming in. Thank you for those of you who were able to get into that poll. We don't have a ton of votes though yet, so I'm going to give it just another minute or two. Again, it's at the bottom of your screen in Crowdcast. Next to ask a question, there's something that says polls. So far, looks like we have a very good smattering, folks. We have people who are just starting out. We have someone who's been in business 0 to 2 years, and then we have a couple people who have been in business for over 2 years. So great. I think that's wonderful because we might get some good feedback here in our chat throughout the day, or not day, we'll just be here a couple hours, I promise, but just getting a good smattering of different people. So people who've been in business for a while might be able to help the rest of us. So the next thing I want to demo for you within Crowdcast is called the question feature. So we're going to go ahead and close that poll, and then we're going to look at where it says ask a question. So I'd love for you to answer this question for me. What do we mean when we say a business is profitable? So if you click down at the bottom where it says ask a question, you can make a comment. And if those of you who are willing to participate would put in a comment today. What do we mean when we say a business is profitable? So those of you who are reading these comments, you can see I'm also participating as a participant, so I can see what you're saying for some of these comments. So when you see Lori Simmons, yes, that is me. I am answering my own questions here. So we've got some excellent answers here. We have more income than cost of goods sold and expenses. Excellent, Marissa, thank you. The business is making money. Exactly, Beatrice. I say there's cash in my register, and Mohammed says making more income than expenses. Wow. Okay, you guys have, we could just be done because I think you guys have got this. Just kidding. But no, thank you very much. I appreciate those comments, and I think you guys are all on the right track here. I'm going to address some of your comments here in a few minutes. So what is the objectives today? What do we really want to accomplish today? Well, of course, we want to help you understand the concept and components of profit. We'd like to help you determine whether your business is profitable, gain familiarity with the profit and loss statement, In doing so, we want to help you read your P&L, but also get to the point where you can prepare your P&L. That might be a step up for some of us, even if we've been in business for a few years. And then the last thing that we're going to talk about today is really trying to understand your profit and loss, and potentially then even moving into financing. So it's one thing to be able to prepare it. It's a different thing if you can read one, but understanding is where we really would love to get you today. So we've got another little survey here. We were just talking about profitability. If you don't mind going to down at the poll at the bottom again, and let's do another poll here. Is your business profitable? No judgment here, by the way. And let's maybe go back to 2019 because, man, 2020 has been a tough year for business owners. So let's think about 2019. Was your business profitable? And if you're concerned about privacy here, answer as you see fit. Again, no judgment, but we'd love to see whether your business was profitable. So we've got a few people responding again. We had somebody, yes, congratulations on that. A couple of us broke even and somebody's not sure. So we appreciate your honesty there, but really, truly, I think that, again, very good smattering of what we really see in businesses here. And then how do you know? So you can either go into the ask a question or even the chat on the side. And by the way, Buck, I'm curious if you're back and if you still have the skipping issue. If you want to comment that for us, Buck, hopefully we got over that issue for you there. But in your profitability, in your business, how do you know if your business is profitable? Oh, good. Buck's good technologically. So we've got that in our ask a question. Is anybody willing to venture an answer there or put something into the chat? How do you know if your business is profitable? Lisa says yes, her business is profitable. How do you know, Lisa? What tools do you use to determine if your business is profitable? So I think people are thinking about this, and that's okay. That's part of the reason we're here today, is maybe we don't all know immediately if our business is profitable. One person answered yes, a couple people said they didn't know. QuickBooks and a tracking spreadsheet. Excellent, Lisa, thank you. Well, you might be a little bit ahead of the game here, but Lisa, it seems like you have some tools in place. So if you want to add some things throughout this conversation today, please do so in the chat. We'd love to hear from you, anything that you could maybe add to what I'm presenting as well. So how do you tell whether your business is profitable? Well, as it turns out, there's this tool called a profit and loss statement, also known as an income statement. Today, you may hear me say P&L. That is, in fact, your profit and loss statement. And the profit and loss does roughly what you'd expect from its name. It tells you whether you've earned a profit or a loss during a given time period. Well, how does it do this? In short, it lays out all of your revenue and expenses over a specific period of time. So the difference between your net income, the difference between your expenses and your net profit or net income. I need to back up again. I'm got myself in circles here. The difference between your expenses and your revenue is your net profit or net income. I'm sorry, folks, that I got talking in circles there. If you track this information over time, you should be able to see trends and then make decisions that impact your business's profitability and the future. And again, so really, it's not just preparing the statement or reading the statement, but what you see from that statement and what you do about it is what we're hoping to share with you today. So I want to go over a little sample business with you today. Let's say you love making lemonade and selling it. You've been doing it since you were a kid, and it's something you've managed to keep doing for years, even though you're done with high school, you have another job. This is just a side gig for you, but you always have good sales, good revenue. But honestly, you don't really know if you're making money. You just kind of go out there, you have fun selling your lemonade. So is your lemonade stand profitable? Really don't know, but let's help you figure that out. So you decide at your next event, you're going to make a budget. You're going to track all of the numbers to see how well you did. So the next event rolls around. It's a big one. It's like nothing you've ever done before. A July 4th block party. So let's assume this is 2021. The vaccine is out there. People are able to gather again. Come on, guys. It's something. We've got to look forward to something. So July 4th, let's assume we're going to be able to have a lemonade stand. Let's assume we can have a block party. So some local moms invite you. They tell you the party's going to last about 4 hours, and they expect about 1,000 people. Space is in high demand. Not just anybody can set up a booth, so they're going to have to charge you rent of $400. Your first thought is, well, that's a little steep, but they assure you there's going to be a lot of people. It's Tucson, it's hot, people are going to be thirsty, and oh my gosh, nobody's been out for a year, so they think your lemonade stand's going to do really well. So you tell them, well, I'm going to think about this. So our question is, should we do the event? Well, we've never really done a budget before, so this is going to be an estimate. So let's start by estimating our income. And how do we go about doing that? Especially for those of you who are just starting out a business. Some of this might be a shot in the dark, but that's okay. We have to start somewhere. Then others of you, maybe like Lisa, who have had a business for quite a while, you might have some specific data from the past to go on. But for this case, we do have a little bit of experience. But we're going to start with what we're charging for our lemonade. Let's say that in your fictional lemonade business, you charge $3 a cup. And then we also know how many people are coming. There's 1,000 people coming. Now, we don't know how many people are actually going to buy the lemonade. So here's where we kind of have to guess, especially for those of you just starting out. I mean, we'd like to assume 1,000 people are going to drink lemonade. Probably not very realistic. So for this case, we're going to assume 40% of those 1,000 or 400 people are going to buy a cup of lemonade from us. At a price of $3 a cup, that's $1,200. So let's back up, just make sure everybody's following me. 1,000 people are coming. 40% of those are going to buy lemonade at $3 a cup. Multiply that out, it's $1,200. So what do we mean when we say revenue? I mean, is that the same as profit? Does anybody want to comment that for me in the chat box? Is revenue the same as profit? Right, Lisa. I mean, and obviously it's in front of you here. You can see it's not. Revenue is not the same as profit. Profit is what we have left over after we pay all of our expenses. So we create a section at the top here called revenue. We put in the $1,200, but now we need to create the expense section. So we know our rent is going to be $400. So it looks like we're going to make $800 in just 4 hours, which kind of makes it a no-brainer, I would think. Are we missing anything on this P&L or on our budget here? We've got the revenue and we've got the expenses. Anything else that we're missing here? Comments in the chat? Are we missing anything on this budget? Cost of your time. Ha! That's true. Very good point, Danny. Anybody else? Is there anything else we're missing in this budget? Capital. Potentially, Lisa, be a little more specific. What do you mean by capital? An initial investment. Potentially. Let's just assume for simplicity in this case, Lisa, that we've been in business for a little while, but I do think I know where you're going. Oh, look at Beatrice. Sorry, Lisa, we'll get back to your comment here, but now you're with me. Beatrice caught up to me here. Yes, we are missing some expenses. Raw materials. And I think, Lisa, that's what you meant. Yeah, I mean, you may have been overcomplicating, but not really. I think that's what you meant. In order to be able to make lemonade, you have to buy lemons and cups and napkins and straws. And I have to be honest with you, as a lender and looking at financial packages, I often have to point out to people that there's, in my opinion, some pretty obvious expenses that they've forgotten. So we're going to try and help you think through those things in your own business today. What are your costs? Well, in this case, let's assume that my lemons, cups, napkins, and straws cost me about $1 a cup. And I know that because I've run my business before. For those of you just starting out, these are probably going to be estimates. So we're going to put that $400 in the budget. Labor. So Danny, I have to be honest, Danny, I'm not going to pay myself yet. We'll maybe see if we can make any profit here, if we're going to pay ourselves, but I do have to pay other people because with 400 people coming in 4 hours, I can't fresh squeeze the lemonade, serve it, take the money, sell it. So I think I'm going to need 2 people. This is before minimum wage went up. So let's assume I was only paying them $10 an hour for 4 hours. So that's $80. I have a lot of lemon peels. I have a trash can full of cups and straws. I'm going to have to pay to get rid of that. So there's going to be a $50 fee to get rid of the waste. And then let's say that we have a machine that accepts credit cards, which some of you aren't quite there yet. A lot of people, you can hook that up to your phone now. So let's be honest, not everybody's carrying cash nowadays, but if maybe we could sell a lot more lemonade if we could accept credit cards. So let's just assume for simplicity, it's about 3% of the transactions. Let's say half the people have cash, half the people don't. So that's another expense. Danny says, wait, we don't have to pay you? Okay, you guys get this. Danny is my boss. Danny's the CEO of Community Investment Corporation. Yes, Danny, you need to pay me, but you don't need to pay me for, I'm not going to pay myself for the lemonade stand, but good one. All right, so for the next slide here, now I changed the format a little bit. I moved this slide into Excel. And Lisa was talking before about using Excel. So Lisa might be fairly familiar with Excel. Any of the rest of you, do you like Excel? Do you know how to use it? Do you not know how to use it? If anybody else is willing to put a comment in there, I would love to see who likes to use Excel because I put this format into Excel. We already know Lisa likes to use it. Anybody else, yes or no on Excel? Any comments there? Well, nobody's jumping in. Danny loves Excel. Lisa, Marissa likes Google Sheets. Ooh, I kind of agree with you, Marissa. I wasn't a huge Google person. My kids have gotten me into Google Sheets, and truthfully, here at CIC, we use Google Sheets. So I'm with you there. Same premise, same program, ultimately. For those of you who aren't answering, my guess is you maybe don't love Excel or just don't have any experience. That's okay. There's lots of classes in the Tucson area online. I don't know if there's anything in person right now, but there's lots of options out there. So you can check Pima College. You can just Google Excel classes Tucson. But Excel is a nice little tool when you're looking to make things easier and quicker for you with your financial statements. So feel free to look for those. So I have to be honest, when you're looking at a P&L, I know that all these numbers sometimes can make your eyes go crossed, and that's okay. Most of us are like that. We're going to try and go through this one slowly. Lisa, I apologize. You might be a little bit ahead of the curve on this, but stay with me because we're going to have some more complex things as we move on. So the first thing you notice, we have Lemonade Stand is the name of my business. Then I have profit and loss, income statement projected, which you can see right here that I've got my little laser pointer on. It's projected because it's coming up. The time period we're looking at is July. Again, an income statement is always for a specific period of time. Now we're going to assume that that's the only event that we're doing in July, and that's why we've that's why we've got it here. Now, let's just ignore the numbers on the right-hand side and just look at the words on the left. So you should see revenue at the top. That's all the money you brought in this case through lemonade sales. Then you have your expenses, like we talked about. So the raw materials, the lemons, the sugar. We have our direct labor because I'm going to pay 2 people. You have rent. We added that waste disposal fee, and then we added the credit card merchant service fee. There's not really any specific order. Use what you're comfortable with here. And then the bottom line is net profit. Okay, and maybe some of you, wait, bottom line, where does that come from? So if you skip over everything else, you'll hear people say all the time, well, what's the bottom line? That is where that phrase came from. The bottom line is your net profit. Right down here. This is your bottom line. And that is where that expression came from. If you hear from someone, they don't want to hear all the minutia, just give me the bottom line. That's where that came from, is the P&L statement. So now we can look at the numbers. We had sales. We're going to estimate sales of $1,200. And then we know all these other expenses. So our revenue minus our total expenses comes up with a net profit of $252. So we have our budget, our projected P&L, with what we hopefully think is accurate numbers. So let's return to our main question. Do you think this job is worth it? So $252, 4 hours, you're making an average of $60 an hour. Although less than that if you factor in the time to purchase your supplies, setup, breakdown, but not too shabby. So here we go, Danny. Here's where I'm going to be paying myself. $252. I don't think it's too bad. What about most of you? Would you do it for $252? Lisa, Marissa, Buck, any of you interested in doing this project for $252? Well, you can probably decide that later. I mean, honestly, with everything that's gone on in 22, I would probably take $252. Let's be honest. 2020 has been rough on all of us. All right, so we're going to move on a little bit. I want to make, that's a good question, Marissa. So Marissa asks, does the net profit go to us specifically or just into the business pot? Well, Marissa, I think that's going to be up to you as the business owner. You might need that $252. You maybe have some bills. 2020 has been rough. But then again, you might be able to leave it in the bank account and use it for future purchases. So I agree with you, Marissa. I'll take it. $252. Beatrice says, yeah, $63 an hour is good. So let's go back to our lemonade stand. And let's talk a little bit about a new category that we call cost of goods sold. Cost of goods sold can get really complicated. We're not going to complicate it too much today. We're just going to say it's the entire cost to produce or acquire the goods you're selling. So it includes raw materials like my lemons, like my sugar, but also the direct labor that goes into producing the product. Now, if you are shipping something in, you could also include cost of freight in cost of goods sold. So for physical products, you are always going to have cost of goods sold. If you're reselling an item, cost of goods sold is whatever it cost you to get that product. If you're making something, it's the cost of those materials. So if we go back to your lemonade stand, we have the cost of the lemons, the sugar, the cups, all the stuff that goes directly into the product you're giving out. Also included in there is the direct labor. Because really what we think about there is you can't sell the lemonade without somebody to help you make the lemonade. And I can't sell the lemonade without someone mixing and pouring it into cups. So really that's direct labor. So that's why we're putting that in our cost of goods sold. Again, if you were shipping something in, you could include shipping into cost of goods sold. And, so I've talked about this for a little bit now. Why is cost of goods sold such a big deal? Well, the main reason it's a big deal is because it helps you determine how much you need to be charging for your product. You have these costs like materials and labor, which are inevitable. They're always there. So we want to put them in the section at the top of this statement so we can see and immediately deduct them from revenues. It's going to give us our gross profit. And it's good to know this because if after making some sales, your sales aren't even covering the cost of goods sold, then you're either charging too little or you're spending too much on cost of goods sold, or both. And either way, you have to make adjustments. And something I'm going to point out here is just because your raw materials cost you something this month doesn't mean it's going to be the same next month. So on a larger scale, in this raw material category, I've worked with a lot of people who are, they use steel, manufacturing steel buildings. The cost of steel goes up and down wildly. So that raw material figure won't always be set. They can't always charge the same for their product. So that's why this gross profit is important. You need to know what those materials are costing you so you know what to charge. Does that make sense to everybody? So you can see here I have in the notes, your gross profit is going to be your sales minus cost of goods sold. And there's also a bullet point here, service companies are not likely going to have cost of goods sold. So Lisa's got a question here. In a service-based business, would lead generation costs be considered cost of goods sold? Ooh, I'm not sure if Betty's joined us yet, but I think I'm going to leave that one for Betty. Caroline, will you do me a favor and see if you can copy that question for Betty in the end? In a service-based business, would lead generation costs be considered cost of goods sold? I think I know the answer to that. I think, Lisa, if it was my business, I know where I would want to put it. But I think this is a great one for Betty, our professional bookkeeper. So excellent. Caroline's added it to the list. So if you don't mind, Lisa, we're gonna get back to that one. And gosh, I love that. I think that's a great question. Okay, let's move on, folks. So the day comes, we get to our July 4th celebration, and here's what actually happened. We only sold 200 cups of lemonade, not 400. I don't know. Maybe we got lucky and there was a monsoon. Well, lucky because we didn't get any rain this year in Tucson. But we only sold 200 cups of lemonade. So our sales were only $600 versus $1,200. So what happened to our costs? Well, it may not be a realistic assumption, but I'm going to say that I can reuse my lemons. They were pretty hard lemons. They're gonna be able to hang around. So I'm not going to have any waste in this case. I'm just gonna say my raw materials ended up being half, $200 versus $400. I still had to pay $80 for the people who helped me. They were still there for 4 hours a piece. So here's my gross profit of $320. Now, because we only had half as much business, the credit card fees were a lot lower. That was only $9. But the other costs were fixed, that $80 and that $400. Oh, and the waste disposal. Trash cans weren't full, but I still had a flat fee that I had to pay for that. Yikes. Now what happens? Now we're at a loss. A net loss of $139. So Beatrice was excited about the $63 an hour. Yikes. That just went away just like that, Beatrice. Why? Well, I'm going to ask you why. So, well, you know what? We're going to talk about why in a minute. I apologize. I got a little bit ahead of myself. Let's go back to the analysis. So we lost money here. We lost money on this event. Rather than getting discouraged, what do you think we could do to change or improve? In the comments, what do you think we could do to change or improve to get a little closer to our projection, to not lose money? If this was your business, what would you do? I've got a couple ideas, but I'd love to hear from all of you as well. In the actual, we lost $139. What would you prefer to do? Any answers? Because this is reality, guys. This happens every day. You expect to make $264, but instead you're got half as many people. You lost $139. Any ideas? Charge more per cup or charge less per cup? Ah, okay. I get your thought process there, Danny. So charging more per cup, of course, we could increase our revenues. I like that idea. What's another way to increase revenues? It kind of gets back to what Lisa was asking about lead generation sales. What about if you had somebody walking around actually selling lemonade or holding a sign about the lemonade stand? That's probably another way to increase your revenues. Charging less per cup. Ooh, well, my immediate thought, Danny, was, well, then I'm going to make less revenues. Ah, or would a lower price point bring more people in? I don't know. All ideas that you have to think about as a business owner. But if you simply prepare this P&L and do nothing with it other than print it, file it, your business is never going to change. So Lisa asked, can we lower costs? That's what I was thinking of, Lisa. Well, maybe Fry's had lemons on sale, or you went to Costco or whatever, but is there a way to lower your costs? A lot of times there is, folks. We get used to a certain supplier. Maybe they've been very loyal to us. They're timely, so we tend to continue to use them. But let's not ignore the fact that there might be a cheaper way to gather our raw materials. So I love that. And then Betty's comment here was use the leftover supplies on future sales. So that's true. Doesn't necessarily help us with the net loss on this particular event, but where it does help us is on future events. So we won't belabor this too much, but I really wanted you to understand that just because you had a net loss, we're not giving up. We're not shutting the doors. It's what we do with that that is important. So I want to point out, when we make projections, we should probably do more than one. And in fact, Caroline knows this morning I've been working with a couple of business owners in Southern Arizona. They're both actually down in Douglas, who are preparing their projections. And they both came to me with what you see in front of you, a best case scenario. This is what they think they're going to do. Of course, these aren't their numbers. These are our lemonade stand. We think we were going to earn $300. We probably should have done another projection called our worst case scenario. So a break even. If we only sell X amount, how are we going to break even? And I think one of you in the beginning said, or maybe two, that your business is breaking even. So you probably know what this looks like. And then you might even have a middle of the road where you can see that they're making a little bit, halfway in between here. Every single day when I ask clients for projections, the one I see is the one on the far left. The one I really want to see is the one on the very far right. Why? Because it gets you thinking. It gets you thinking, what do I have to charge for my lemonade? It gets you thinking, Lisa, could I buy my lemons or my napkins or my straws somewhere else a little bit cheaper? It gets Danny thinking, should I charge less or more for my cup of lemonade? That's why I like to see the worst case scenario. And then we move on from there. Does that make sense to everybody? Why we should really start with a worst case scenario and then prepare maybe more than one projection? Hey, Lisa's from Douglas. Awesome. Well, obviously, due to privacy, I can't disclose who I'm working with, Lisa, but we have some exciting, really highly qualified business owners and We're having so much fun. I'll probably be down next week, actually, to go inspect a couple of those businesses down there. So let's move on. It is exciting, Lisa. I agree. We love what we do at CIC when we can help out small business owners. So what we talked about so far is the profit and loss covers a specific period of time. Our lemonade stand was just the month of July. It lets you know your overall net profitability. And I'm going to jump up to the right. It does include cost of goods sold and helps you determine your gross profit. So there, Danny, to your point, we know whether we're going to continue to charge $3 a cup, maybe go down to $4, down to $2 or up to $4. Helps you see where to cut costs. If your gross profit is not positive, you either need to cut costs or increase your sales price. Can be used for projections. And again, let's look at a couple different projection scenarios. And it can potentially help you get financing. Real world scenarios I gave you, my 2 businesses in Douglas are looking for financing, and we are working on projections. We have their historical P&L, but we're also working on projections. So let's pause here for a moment. Questions. You can either click on the Ask a Question at the bottom, or you can put something in the chat. Any questions about what we've talked about so far? I know it takes you all a second to type. I'm going to continue to move on. Again, we'll make sure and get to all of our questions, get those to Betty, Danny, or myself before the end. So let's use a sample business, all things fermented. So we have a series of questions we've made up about another fictional business called All Things Fermented. They are a small business here in Tucson. It's kind of a side hustle for the business owner. It's something she really cares about. After a year of doing business, she put together a profit and loss statement. So here's what she does. She's a producer of fermented foods, kimchi and sauerkraut. She sells wholesale, online, and at farmers markets. And she charges about $5 a jar. That's what that squiggly means is about. So here's her profit and loss statement. I apologize, you guys. This should all be one long column. So let's assume that dues and subscriptions falls right underneath donations. We just couldn't fit it on the slide that way, but there's a lot of expenses in real businesses, as we all know. So again, this should all be in one column. If you're screencasting, make sure that the net profit's not blocked by a pop-up. If you can't see that net profit, let me know. But hopefully you can see the net profit for All Things Fermented is $477.20. So let's go through a couple questions. And I really would love your participation here, all of you, in the chat box. What time period is covered on the All Things Fermented profit and loss statement? So here's the statement. What time period is covered? Somebody please venture a guess for me. Marissa says January through December of 2019. Ding, 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 ding. Yep, you're right, Marissa. Thank you. Thanks for participating too. So yes, we can see that right at the top. That time period is an entire year. How much revenue did All Things Fermented earn during this period? Again, Marissa, feel free to jump in. Anybody else? How much revenue did they earn during this time period? Beatrice, 10,540. Again, you guys are on top of it. Yep, right there. 10,540. We add their different types of revenue together to come up with that total revenue. So what is the largest source of revenue for All Things Fermented? What is the largest source of revenue? They've got 3 types of it. Wholesale. Yeah, absolutely, Marissa. So you won't always have the largest source come first. In this case, it just happens to be listed first. And again, with 2020, everything got turned on its head. So you used to make most everything wholesale, could have gone online this year. But yep, that's correct. It is wholesale. How much net profit did they earn? Well, I think I already told you this on the very first slide, but Humor me, let me know you're following me. How much net profit did they earn? I know you guys are still with me. I can see you. Anybody? How much net profit? Well, maybe your screen is cut off. I'll give you that. Yeah, okay, that's what Marissa was saying. She can't see it on the screen because, yeah, and I apologize, Marissa, I can't move that up, but let me show you what that is. It's $477.20. Not phenomenal, but, at least it's not a loss. So, in terms of expenses for all things fermented, which is greater, operating expenses or cost of goods sold? So I can see that the Community Investment Corporation, that logo is a little bit over, but that says total operating expenses down on the right. So I've circled those two figures for you. So we want to know, is her cost of goods sold or total operating expenses more? Exactly. Thanks, Beatrice. Yep, it's operating expenses. And what's the largest cost under her cost of goods sold? So she's got 3 parts of cost of goods sold. Which is highest in that case? So I think you guys can probably figure that one out. It's the raw materials. So the raw materials, 2,830. I believe this is the last question here. So this is what we all want to know. We're all business owners. If we worked 10 hours a week running this business, what was our, that's okay, Lisa. It's not a trick question. We're going to try and keep it fairly simple today, but that's okay. So if we worked 10 hours a week, what was our average net profit per hour? There's 52 weeks in a year. So here's how we're going to do this. We are going to find our net profit, which we know is $477.20, which I apologize, Beatrice, I know you can't see that, divided by the total number of hours worked, which in this case, we work 10 hours a week for 52 weeks. So that's 520 hours. So $477.20 divided by 520 hours is 92 cents an hour. Okay, I kind of like the lemonade stand better, Beatrice. I don't know about you. I know you were excited about that, making that kind of money. I think we made $60 an hour or something. Yeah, this 92 cents an hour, ouch. My opinion there is that is what you call a labor of love, at least for this time period. So another question here. Assuming that the business charges an average of $5 a unit, how many units would you estimate that they sold? So we'll walk you through this one too. First, we're going to find total revenue, which is right over there, 10,540. Then we're going to divide that 10,540 divided by the price per jar, which we know is $5. And we have to assume she sold 2,108 jars within that year. That's a lot of jars of all things fermented to only make 92 cents an hour. Just my humble opinion. But, she's starting out. At least she didn't lose money. So maybe that's okay. Maybe she's working on growing the business. So how about questions on all things fermented? Anything in that exercise that confused you, just be honest. Feel free. You can put it in the ask a question. You can put it in the chat. Any questions on that little exercise we went through? I've either completely stumped you or you guys are bored stiff, one of the two. Hopefully it's not bored stiff. All right, let's keep moving. Okay, it's great. We understand that income statement. We learned how to read all things fermented income statement. But what should we do now? So here's the first thing that I really want you to think about. And Caroline and I see this every day with the clients we work at CIC. We want you to think about separating your business from your personal. If you don't already have one, create a business bank account and get a business credit card rather than using a personal credit card. So if people are wondering, well, why is that necessary? It's just necessary to keep things separate and simplified so you know what's a personal expense versus a business expense. If you have other sources of income, a partner, a spouse, someone shares a bank account with you, it's just too difficult to know whether that business is making money. And let's be honest, folks, if we can't make money over the course of time, we really should be thinking about moving into something else. And if you don't have that income and expenses separated, it's really going to be difficult to determine if you're making any money. And then the next thing we're going to ask you to do is organize your data. By organizing your data, I mostly mean your income and expenses for your business. So you're going to want to start organizing receipts, maybe going through bank statements, credit card statements, and we'll talk about some tips to do that. But a lot of people want to know, well, how much data should I organize? Well, I have to be honest, it depends on your goals, and we're going to go through a couple different scenarios here. It's not meant to encompass everything, but these are some of the things that people come to us with, and it might give you an idea of how much data you really need to pull together. So let's say you're ready to apply for financing now. You have a business that's been in business for a little while. You want to move out of your garage and move into an office space, into some industrial space. You want to grow. You want to expand your business. So you want to apply for financing. How much data are you going to need for that? Well, this slide is in a little bit of an incorrect order, but what this means is we need everything year to date. We will need everything from 2019. So your income statement and balance sheet, which we won't be talking about the balance sheet today, but we will if you're joining us next week. And also probably 2018 if you've been in business for that long. So a traditional lender, you go to your credit union, to B of A, to Chase, a traditional lender is going to ask for all of this information. So I guess one of the questions that have been asked previously when we've done this was, well, what does CIC need? We are a little bit of a non-traditional lender, helping those folks that can't get traditional bank financing. Guess what, folks? I need the same thing. So just be prepared. If you're going to ask for financing, we need your current financial information. We need what you did in 2019. And if you've been in business that long, also your 2018. Boy, isn't this we would have never thought a year ago we'd need to have this in this slide. How is COVID-19 affecting my business? Well, it is. We know it is for everyone. I have to be honest with you. We actually have some businesses that are thriving right now. We are very excited for them, but we understand most of you are not in that position. And that's okay. But let's understand what the difference is and what COVID-19 has done to affect your business. How do we figure that out? Well, we have to see statements from 2020 and compare it to the same time last year. That's hopefully how we can see what COVID-19 has done to affect your business. Positively, maybe because you pivoted, or maybe negatively because you didn't know what to do, you got stuck, and that's happened. So a lot of people are asking, how can I grow and can I afford a loan? Well, to do that, we're going to need to understand what are your loan requirements. So you get on the phone with your banker or your credit union, you call myself, we go through what the loan requirements would be, and then the representative year. So whether that was 2019, most likely, we're still going to want a C20, but it was probably different for most people. And then probably even some projections to figure out, can I afford a loan going forward? If you want to project income for new projects, and please, 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 if you think about changing, pivoting, doing something different, prepare some projections. So we talked about projections. It's really just an income statement, but looking into the future. And then I want to make sound financial decisions from here on out. Well, folks, let's start capturing the data now. I don't care if you don't have information from 6 months, a year ago. Let's start today. I think it's wise to capture financial information as soon as you decide that, you know what, I think this is going to work for me. I want to keep moving forward for the business. So let's talk about creating a chart of accounts for income. So we looked at that financial statement and we saw that there were different categories for revenue. There were different expenses. So a chart of accounts might be a new term for you, something might sound a little scary. All we're really asking you to do is breaking things down into buckets or categories. So I'm going to recommend that you start with expenses. So come up with this bucket of expenses. Gather your bank statements, receipts, and you might find like items like internet, phone, cable. Those might all be utilities or telecommunications. You might have inventory, software. That might be a category called technology. And if you get stuck on this, if you don't know what categories to use, we have a sample P&L that we put together at CIC. We'll give you the link to that in one of our future slides. You can also just Google sample chart of accounts, restaurant, or whatever type of business. And there's probably going to be 15 to 30 categories. It's a lot of things that we spend money on. I wish there was that many sources of revenue, right, folks? But it's really not. We have a lot of areas that we have expenses. So I think the trickiest part, though, of making a chart of accounts is really separating that cost of goods sold versus operating. And why was that so helpful to us? Because it helps us determine how much we need to charge for our product. So after we've organized those expenses, and then we figure out, okay, what's cost of goods sold? Food, beverage, alcohol, if you're running a restaurant. Rent, advertising, software, those are all going to be operating expenses. Direct labor, again, cost to produce lemonade for a lemonade stand, that's going to be cost of goods sold. But once you have these things together, it's your chart of accounts. So it's really not rocket science. We don't want you to overthink this here, but this is just a really good start. Now, here's the other thing. Don't get hung up on if you miscategorize it at first. We can always move it and change it, but at least be thinking as you're spending money, if this is going to be cost of goods sold, if this is going to be operating income. And when you're creating your chart of accounts, some bookkeepers might be able to help you with this. I know that Betty has worked with some of her clients on that. But one of the things that is offered to you through QuickBooks, they'll help you set up chart of accounts. It's not free, pay about $50 for it, but there's resources out there. So I just want to give you some tools, some things to think about before you, again, there's a couple of us who are just starting businesses. So if you haven't created your chart of accounts, or maybe Lisa, you have one, but maybe need to alter it, these are just some items to think about. So those are our expenses. Income, I find to be a lot easier, only because most people just have a category called sales. If you really want to separate things out, here's some examples of different buckets of income for your chart of accounts. For restaurants, you might have food, beverage, alcohol, catering. And as a person who's analyzing the financial statements I receive, I love to see this much detail because there's not very much profit on food. There's usually some really decent profit on beverage, a ton of profit on alcohol. And those are just good things to analyze. Catering. People lose money catering. Oh my gosh. But they don't know it unless they separate that out. Now, in each of these, we show some negative things. So you may have discounts. Let's say on Wednesday, your restaurant offers 20% off to seniors. Well, that's a discount. You're still going to show that income at your full sales price, but then show the discount. So you can see how much money you're making or losing by offering that discount. So that's why we show that in there. Pretty detailed, but that's just one of the things you can start thinking about as you're looking to prepare your chart of accounts. Well, let's jump into some tools to help us organize. So we've come up with a couple different basic categories here. We don't want to endorse any one over the other, and it's really what works for you. And I have to be brutally honest, if you're very just starting out, you're probably going to start on the left with paper, pencil, and calculator. I absolutely did that when I first started my small business. Then you might get like Lisa, where you move it into Excel a little bit. Lastly, Lisa also mentioned she's using QuickBooks right now. I happen to use Quicken, so more of the personal side. But there are a variety of different sources that you can use to organize your finances for your business that's just starting or one that's been in business for a little while. We're going to talk a little bit more in detail on each one. Please understand we're not endorsing any of them. These are just some examples. We want you to do your research, see what's going to fit best for your current situation. And we encourage you to play around with a lot of them. There's tutorials out there. But we're going to give you a taste of each of these, see what might fit for you. So let's start with paper, pencil, calculator. So literally, it's what it says. You're going to have your calculator next to you. We're going to ask you to track receipts, your sales, your expenses, write it down on a yellow pad. You'll have to gather your bank and credit card statements because those are going to be additions or subtractions. You'll create your chart of accounts. We suggest sorting by an envelope method. So your receipts will either go into an income folder or maybe multiple expense folders. Maybe you'll color code them. Cost of goods sold might be in a yellow envelope where your operating expenses might be in a red envelope. All those things are very, very useful. Just find a system that works for you, and you're going to manually write out your income statement. So when I say manually, you could use a format. So I think Caroline has a link available. Now, this is on our CIC website. So I'm going to talk quite a bit about visiting our CIC website. Caroline just populated that into the chat. Don't worry, you don't have to write that down now because this is being recorded. You can go back to that at any point in time. But that's an example of a profit and loss statement that it almost looks like Excel, even though it's not. And it's going to walk you through on the left-hand side. If you save this to your hard drive, then you can go in and type, instead of revenue stream 1, you might say lemonade stand sales. And you might say something different for revenue stream 2 or 3. Or you could leave them like this, and frankly, you could print this form and handwrite it. We really don't care, but there's a tool out there. So we've got the link right there for you. So don't forget, there's a starting date and an ending date. So if you download this to your hard drive, you can input those, change them wherever you want. Here's an example of what it might look like. So we just put the colors in here so you can see what's going on, unless you're teaching school at home and that's going to be teaching your preschooler colors. I guess you can do it that way. But one thing I want to point out, okay, all things fermented, it's our P&L. We have a date, 2019, presumably all of 2019. Squiggly lines here mean there's multiple different types of revenue. There's multiple types of operating expenses. It's probably going to be a legal piece of paper. but you can do this. You can handwrite this out. You can color code it if you want to. We just did that so you could see the different categories, but that's what your handwritten P&L looks like. And that's where most of us start when we're starting a business. So let's say we've been doing this for a little while. Pretty comfortable with this, but gosh, I'm using a lot of eraser. They don't even make whiteout anymore. And it's taking too much time. I can't run my business. Well, maybe the next place you start is a spreadsheet. So we're going to do the same things. We're still going to track our receipts. We're going to gather our bank and credit card statements. But now we might be able to download a CSV or Excel file from the credit card company, from the bank statement, and that might save us some time not having to re-enter everything. Because again, as you get busier, that activity gets more and more. Again, we're going to create our categories or our chart of accounts. Again, if you're a little more savvy, you can download those templates. You can research a chart of accounts for your industry, and then you're going to enter them into your spreadsheet. So Caroline, I believe, is going to be in the background again, and she's going to hopefully be able to give us so she did two things there in the chat. She added a profit and loss statement, and then, she added here the P&L. It's the full year statement. So again, if you go on our website, there's going to be different versions. There's a quarterly version, the annual version. Don't forget to download it to your hard drive, because if you try and type in it right when you're on our website, your information is going to be there for the whole world to view. We do try and limit that. We don't want anybody working right on our website. So go ahead, download it, save it to your hard drive. But this is a really good tool. This is exactly what it's going to look like. If you download this, you see there's some red in here. These are cells that can't be changed. We do that to keep people from hurting themselves, so to speak. That way you can't change too much that can't be undone. If you're really knowledgeable with Excel, you can unprotect the sheet once you have it on your own computer. You can do with it what you want. But so again, that's the Excel form. And the last thing, accounting software. So I have to say, and I think Betty would agree with me on this one, if you have less than 10 transactions per month for your business, it's probably a little too soon to go to accounting software. And I'll talk about the reasons why I believe that. So benefits to accounting software. Maybe you've used the first two methods, the paper and pencil, and Excel, you're ready to step up. Good thing about accounting software, there's no formulas or math. It does it for you. Now understand, that's why like when you start on paper and you start on Excel, because you understand 1 + 3 = 4. You know where the 1 came from and where the 3 came from. If you just start with accounting software, sometimes that's a little tough. So maybe a pro or a con, but usually in the long run, it's a pro, no formulas. Automated actions. You can upload your receipts. You can import transactions. It might automatically categorize things for you. So like when I'm in Quicken, it memorizes certain places where I do business. So if I go to Home Depot, it's going to know what category I want that in. Oh, huge time savings, especially when you get busy, folks. So another benefit to accounting software, it's really good at handling volume. They do offer a fuller suite of services, invoicing, billing people, payroll, taxes. There's a lot of things that accounting software can help you with. It's not free, but again, your business is growing. You can probably afford to pay for things now. It'll generate the report for you. So all of this is kind of a moot point, but it's going to make your P&L for you. And the other thing that Betty can attest to, it's going to make it much easier to work with a bookkeeper. And Betty already commented to agree, I think, on that one. Bookkeepers are going to walk that walk. They're going to speak that language if you're using their accounting software. Now, we want to be honest with you. What are the cons of using accounting software? It does cost money. We're going to go through 2 examples here so you can see about how much. It's not earth-shattering, but it's not free. There is a learning curve. Most of them do have demos. You can go through their training, and they typically have free technical support. It could be a difficult initial setup, but I'm going to argue if you've done it on paper and if you've done it in Excel, it's going to be quick and easy to set it up in any of these software programs. Now, data may be hard to extract. Again, that's where you need their tech support, or you need a bookkeeper and accountant to work with you, because once it's uploaded in there, you may not be sure how to get it back out. There are always security concerns with the cloud. And of course, you need the internet. So we're going to urge you to back information up, password protect things, and make sure that you have up-to-date virus protection on your computer at all time. So we want to give you the caveat. We do not endorse any particular accounting software. Betty can tell you when she speaks at the end, maybe what she prefers. But there is an article out there that was just updated in July 2020. And I think Caroline's going to put that in the link for us here. This is April. It was updated again in July of this year on what ZDNet believes is the best accounting software for businesses. They like QuickBooks, they like Sage, they like Zoho. They go over a few other of those, but we wanted to give you some sources right here at your fingertips that you can look into accounting software if you haven't already done so. So when you're looking at software, we think the first step is just to familiarize with the software. There should be basic tutorials. Sometimes there's apps. Sometimes you can access this on your phone, which I can tell you as a small business owner, I love it when I can take a picture of a receipt when I'm out, because by the time I get home, I unload things. I've been running my business. I don't know where that receipt went. So sometimes it's nice to have an app. So some of these programs will have that for you. And again, there's a learning curve. You might have to run your Excel or your paper versions concurrently while you're learning how to do this. But I think if you take the time, you're going to save time in the end once you're ready for this. It's going to help you create your categories in your chart of accounts. It will urge you to import your bank statements, your credit card statements. So the process is going to look pretty much the same. Now, understanding when you're setting up your business and accounting software, it's going to ask you for your chart of accounts, and you'll need to know some of your balance sheet accounts. We're going to talk about your balance sheets next week. So if you jump out today and you decide to work on an accounting software, just know that we're going to have a little bit of information we're going to share with you next week. So you can get started on it. You're probably not going to be able to finish it until you get some more advice on that. Again, QuickBooks will help you set up your chart of accounts for $50. I've not personally done this. I've just kind of done it on my own and just gone through it winging it. But you can always change what you do. So it's up to you whether you choose to pay someone, pay the $50, pay a bookkeeper. I would just advocate for just jump into it, and you can always make changes over time. So we wanted to highlight two different programs. The first one we're going to talk about is Wave. In the course of full disclosure, I've never used Wave, but I do know that Zoho article, or ZD, excuse me, the ZD article ranked it very highly. The reason we talk about Wave is it's free. So it might be a really good place for you to start out if you're not at the point where you can afford to pay for an accounting software. They do charge for different levels of service. Like if you add payroll, there is a charge for that. But other than that small cost, it's pretty slick. Has a good balance of being easy to use, powerful. You can add features to it like invoicing, and it just kind of gives you an idea of what it's like to use a cloud-based program. So when you're looking at this software, you can find basic tutorials, but even before you go into the software, you can check YouTube and see, there's always going to be tutorials out there. We talk about a learning curve. This one, from what we read, is a little easier to learn than some. Where we say here it's newer and they're working out bugs, that's just from feedback that we read out there, and it's not as well known, I have to be honest. In all the time, decades that I've been a lender, I've never seen anyone using Wave, but again, it came pretty highly recommended, so we wanted to give you a chance to take a look at Wave. So here's an example of what the chart of accounts looks like in Wave. So chart of accounts, you can see expenses. Now they create defaults in here for you, including some of the descriptions. We didn't add hardly any of these. Now we did go down into cost of goods sold and add lemons, sugar, etc. We should have titled it raw materials, but that's okay. It's just a good reminder that's back to our lemonade business. But you can see here, there's cost of goods sold, and there's operating expenses. This is all under our expenses category. So once you have your chart of accounts set up, you can add transactions either manually, or you can use it via bank import. This program does allow for that. And you can see in here all the different expenses that came in. So like State Farm, that's insurance expense for vehicles. So if it's in black in Wave, it's an expense. If it's in green, it is an income category. Another thing you can do in here is you can, if something didn't come through the download because it wasn't a credit card or on your bank statement, you can add some income or you can add expenses. It's very intuitive how this works. Now, here's my favorite part of Wave. I have to be honest with you. When you go to reports, it can generate all different types of statements. Well, right here, it prepared your P&L. And I love this format. I don't get to see this very often, but for me, conceptually, it just makes sense to have this horizontally. Now, here's the typical, what we taught you how to do today. Income, cost of goods sold, gross profit, your operating expenses, and your net profit. Okay, that's pretty standard. There's your date. I like it like this. I like to see your income here, your cost of goods sold, minus your operating expenses, and your net profit. I'm a voracious reader. I know Caroline is too. Maybe that's why I like this, because it's the way that we read. I don't know, but I just have to tell you, I like that about Wave. So for some of you, this may hit home. You may say, yeah, Wave's the program for me. So I wanted to point that out. I like that report. So pricing for Wave, when we look this up, most of this is free. Your accounting, invoicing, receipts, all that's free. If you want to accept credit cards through Wave, there are fees. You know, we talked about that average 3%. This is where we get that. Now, where you look into some steeper fees is payroll. If you don't mind, Caroline, we're going to ask Betty to talk a little bit about her opinions on paying someone for payroll processing. I have a personal opinion here, being a lender for decades. If you are going to have employees and you are going to be paying them, I would like to highly encourage you to use a payroll service. The one organization you do not want to cross is the IRS. And if you calculate payroll taxes incorrectly, if you make a mistake, it could be very expensive for your business. So this does sound like a lot, but I'm going to ask you to really seriously consider when you add employees thinking about a payroll service, because they will protect you against making a mistake that you're just not aware of. So again, we'll have Betty talk and give her opinion on that at the end. So the other one is QuickBooks. I'm fairly knowledgeable with this. I think Lisa was saying as well that she uses QuickBooks. I use Quicken, just more the personal version of it, because my business is very small. So pros of QuickBooks. It's powerful. I have to be honest, it's kind of the gold standard. They have a desktop, they have an online solution, they have a ton of tutorials. If you suspect that eventually you're going to need to bring a bookkeeper into your business, this is kind of the standard that all bookkeepers and accountants know. There's a ton of resources out there. There's people who teach classes on it. again, there's just a lot of positives to QuickBooks. Now, negatives, let's be honest, we're going to point out everything because we're not advocating for anything. It's not free. The very minimum with them is $12 a month, and it is a little harder to learn. Again, if you have some time, you make the time, I think you're going to be fine with it because there's so many tutorials and resources out there. Now, there's no free plan with QuickBooks, but what I'm showing you here is a demo account. It's a fake business that's already set up where you can play around with a bunch of the features. They have a landscape business. Craig's design and landscaping service is what they show here. And you can just Google QuickBooks tutorial or QuickBooks demo, and that's what's going to come up for you. So when you're in QuickBooks, if you go into reports, you can generate a lot of things. So under accounting, you're going to see all the different reports that you can run. This shows your chart of accounts. Here is a profit and loss report under reports. You can see the time period that you're going to set. You can do totals. There's just everything here is a drop down. You can customize it. You can save it. So the next time you put in a new date, you get that same exact report. I have to be honest, I do that one a lot myself. And this is what your P&L looks like. You don't get the fancy left to right like I liked with Wave, but it's still here. Got your income, different types of income, and it just goes down from there. We can't see that whole screen here, but it just kind of gives you a snapshot. That's what QuickBooks looks like. So here's pricing on QuickBooks. Oh, and by the way, if you didn't notice, Caroline put the link to their demo for QuickBooks right there. So you don't even have to Google it. Thanks, Caroline. I appreciate you doing that. So here's some standard pricing on QuickBooks. Very, very minimum, $12 a month. If you want to bump up a little bit, it's $20. Note that when you add payroll, it's going to be an additional $22.50 a month plus $4 per employee. And that's the most basic plan. Now they do have bookkeeping setup services for $50 and a live bookkeeping option where you can pay them for ongoing management. I'm just going to say I like working with people. So I would prefer to work with a local bookkeeper if that's something where you can afford and get to that point. So we've talked about a couple different options here. We gave you the link to that site, but right here in the chat, you can see we've compiled some more resources on those different options. And hopefully it was helpful just to kind of look at those and see, oh my gosh, there's stuff out there. Some might fit for me, some might not. It's all about what's going to work for you because we want to allow you to be out doing your business because that's what you're good at. But by the same token, you have to prepare those financials. Oh, that reminds me, preparing financials. Gosh, yeah, why do we do this? Danny, you can address this a little more too, but when the pandemic hit in 2020, PPP loans came out right away. Our biggest frustration was that a lot of clients could not be helped because they didn't have financial statements. So why are we doing this? This is why we're doing this. Nobody expected a pandemic. Everybody was just going along running their businesses, but they couldn't get PPP loans if they didn't have financials or at least a way to gather those financials to be able to get those loans. Now, we pulled all sorts of resources together. We helped everyone we could, but let's not let that happen again. So let's keep moving forward. And from today forward, promise each other and promise ourselves, we're going to start organizing and we're going to learn how to prepare these statements. So just kind of a summary. When you're adding cleaning data for no matter which of these forms you're using, paper and pencil, Excel, or accounting software, try and link all your bank and credit card accounts, practice categorizing your transactions just in your head, in the car, in between jobs. If you can import your bank statements, sometimes online banking will go back 2 years. So if you haven't started, that's okay. You can go back a little bit. Manually enter any of your cash transactions. And I'm going to encourage you for your business, try to avoid using cash because it just makes it that much more difficult. If you have a check or you have an online or a credit card receipt for it, it's going to be that much easier to categorize. Bulk categorize transactions. So every time a Verizon or AT&T bill comes in, or both of them, we know right where they go. And then pay attention to your account transfers. So the example we use here is paying off a credit card is not the same as income. So when you're transferring from one account to another, a lot of times accounting software is going to want to classify that as income. It's not income, folks. When you get a loan from CIC, it's not income. It may increase your cash, but it's not income. So be real careful with your account transfers. And if I'm talking over your head here, that's okay. We'll at CIC, we'll sit with you and talk to you about what we mean by this. So really now I'd like to summarize, and I jumped ahead a little bit by saying about the PPP loans, but what we really want everyone to understand today is how to use your profit and loss or income statements. You learned how to categorize, how to prepare them, but now we really want you to think about analyzing that income statement, analyzing changes from month to month or period to period. So ask yourself, what changed? Why did that change? But most importantly, what changes can I make to my business due to what I see? So maybe my sales were stable, but I owned a steel business and my cost went through the roof. Did I change what I was charging my customers? If not, I'm not analyzing my P&L and I'm not using that information. So I hate to keep beating a dead horse, but 2020 taught all of us we can't just keep going along like we always have. We have to analyze every time we prepare a statement. So another reason that we might be preparing profit and loss statements is to prepare them for the bank for financing requests. We'd all like to get a little loan to grow our business, to pivot our business. And I want you to be prepared for questions. So as a banker, I will always ask, or a finance person, I guess I should say, I will always ask those 3 questions above to the business owners. What changed? Why? And now what are you going to do? And I'm going to tell each of you as a business owner, for you to say to that person who asked that question, I don't know, but I'll look into it, is an acceptable answer. Don't make something up. Don't lie. You can always say, I don't know, but I'll look into it. And then you dig into that and you work on figuring it out. And the last thing that I want to point out, coming from my side of the desk where I'm analyzing financial statements, is please don't ever get defensive or be threatened by a good question from a banker or an accountant. They're just trying to really understand your business, maybe make suggestions for improvements. I believe it was Lisa who said, well, maybe we can buy the lemons cheaper. A banker might ask you that. Could you have bought your raw materials somewhere else? So it's not to attack. The banker, the accountant, the bookkeeper, the finance person is really just trying to understand your business. So hopefully that helps you. Again, I'm going to go back to the PPP. We really want you to have these financial statements so you can understand them. But in the case of a worldwide pandemic, something that nobody ever expects, without good financial statements, it's going to be really difficult to be prepared to pivot, to change, or to move to whatever times we have thrown at us. Questions. That was a lot. I feel like I just talked a whole lot without giving you guys a chance to interject. So I guess the last thing we went over was really the different programs, whether you want to do paper and pencil, Excel, then why we use these financials. Does anybody have any questions about that last section that we just reviewed, or really anything now? Because we're finished with the presentation, we're going to move to some introductions. We're going to let Danny and Betty speak real briefly, and then please don't leave us, folks, because we do want to get your feedback. We do want to do a little summary. So I'm not seeing any questions pop up now. Again, visit our website, but here's our contact information. Danny's information is here. My information is here. Again, you'll be able to come back into this presentation anytime, so you don't have to write too feverishly. We did record this webinar. And we're going to add you to our eBlast list so we can share the link to the recording. You can share it with any of your friends. Please feel free to do so. If you haven't already signed up for the seminar, that's a week from today when we're talking about balance sheet. If you found any value in today, please do so. And again, after Danny and Betty are done, we'd love for you to fill out a really brief survey because, again, we're doing the one on balance sheets next week. And so we just put up the link to the feedback. Please be honest and open. We would love to hear what you have to say. But right now, I'm going to go and bring both Danny and Betty on one by one. Betty, I know we have a couple things we'd like you to talk about payroll, and then there was a question there, and then I think we're going to let Danny wrap it up for us. So if you guys bear with me, I am going to get back and we're going to bring them on. So we've invited Betty, if she's still, she is still here. I'm going to mute myself, and Betty, I'm going to let you go ahead, and if you don't mind answering those questions, and then if there's anything in the chat, we'll let you know as well. So thanks for joining us today, Betty.
Thank you. I enjoyed the presentation very much. So I did want to answer a couple of the questions that came up in the chat. In the question, if you're running a service industry or in business as a service-oriented business and lead generation, would you classify that as cost of goods? In general, for service businesses, I do not use the cost of goods feature in the profit and loss. I am looking at the overall, my income is created by my work, and I'm looking at the expenses as one category. I did want to add one other thing though, because if you have, in particular, restaurants and small retail businesses, another thing you can do with the cost of goods that is very helpful is some restaurants want to see the wages of the servers, the front of the house staff, and the kitchen as part of their cost of goods. And that is a very effective way to look at your business. The same with, like, if you're a production retailer, maybe you do retail and you make t-shirts. You might want to put the wages for your staff that is producing the t-shirts into your cost of goods. And then you could have your wages as the manager or the administration wages that you have for other employees in your general expense section. So those are a couple of tips I like to share. In regards to the chart of accounts, I always tell everyone that it's really your most important tool in designing your financial statements. And using sub-accounts, using them so that it gives you enough information for what you're looking for. You can have too many where you get down, if you have 35 and you're getting, the detail is too small, it doesn't tell you a lot. But if you only have one, like sales, that doesn't tell you information either. So I do say, do spend time on your chart of accounts and categorize both your income and your expenses. And then, yes, I am 100% a believer in a payroll service. This year, the payroll forms have changed multiple times with the CARES Act and PPP loans and FMLA changes, and it can be very confusing. So payroll services are worth their weight in gold. And if you look around, there are a couple of local payroll companies, and it's always nice to work with someone local if you can. If you're comfortable, there are some that are just online, and then there are others that are like big payroll services. But I always recommend using a payroll service these days. And lastly, YouTube is a great resource. You can learn a lot about bookkeeping. You can learn a lot about Excel, which you can use. And if you're using a bookkeeping program, you can find answers there. So I hope you enjoyed our program today.
Awesome. Betty, thank you so much. We so appreciate all the expertise that you provide to us here at CIC. So thank you so much.
You're most welcome. Most welcome.
All right. We are going to bring Danny on. As I told you before, Danny is the CEO of Community Investment Corporation. He is the backbone of this organization, the one that holds us all together. He was the jokester early on, saying that he didn't have to pay me anymore. But yeah, the heckler in my presentation. But Danny, I'm going to minimize myself. And if you don't mind just addressing the group and give us some of your closing thoughts, please.
Sure. Well, first of all, thanks everyone for joining us. We really appreciate you taking the time. And I think Lori did a great job for us. You'll see there are a lot of us from our staff actually here. We think this is so important that we do take our time to be part of these presentations and the basics of financials. It's one of the things that as a lender who's trying to help people who don't always get the help from banks, we still look at these types of financials to make sure that people are ready for a loan perhaps, or even just to work on their business. And one of the, I think, key takeaways that Lori had mentioned, in obviously with COVID-19 and those types of things, is you don't always know what you need until you need it. Some people think, oh, I'll never get a loan, I won't need that. And the reality is that someday you may, and in that case, you're going to need financials. There are lots of reasons to have them. Again, it's basic. This is your basic tracking of your business, whether or not you're profitable or not, how profitable, so that you can make better choices for your business, better choices for your life, even in the idea of is running a business what you want to do versus working for somebody and getting paid. I myself have a side hustle with my wife who runs a web company, so we're always looking at that while I also work and get paid and work for somebody else. And so it's interesting to have sort of both of those lives going on at the same time. But again, thank you so much for coming. Don't miss the balance sheet. It's a little more complicated, but it's a very good complement to this. It answers some of the other more difficult questions, things about how you recognize a loan, and things about credit cards that Lori was talking about, and gives you also a sense of your business's worth and overall financial health. So we hope you'll join us when that comes around. But thank you again for taking the time today.
Well, thank you so much, Danny, and thank you to all of you for spending some time with us today. We hope you learned something. Please, again, go into the chat and give us your feedback on the event today. We hope you learned something new. I learned something new every time I present this, and we hope to see you next week for Balance Sheet. If we don't see you again, best wishes for a happy, healthy, safe holiday season, and boy, really hoping 2021 is a very different year for most of us. So take care, everyone. Thank you so much.
Thanks, Lori.